For Traders Exclusive, I'm Jill Malandrino with the Streets Options Profits, and all we have heard about is the fiscal cliff to ad nauseum through various media outlets, and we're going to hear about it again today. What I find interesting is that we're seeing some complacency in the market, I think, until we see a headline with some sort of government official saying that we're either getting close to a resolution or we're not. And I really don't think investors care at this point. They just want some clarity so they can figure out when it's time to potentially put some cash back to the market, because this low interest rate environment is just not working for people who are saving or either in their retirement years. What we're seeing in SPX options is that the put volume is relatively low, which indicates that there's not much demand out there for insurance. If you take a look at the way the VIX is trading, near term and long term, the term structure is also indicating that there is not much fear, or we're not expecting as much movement to one side or the other going into some of the longer dated months. Another interesting concept I'm seeing is that we're getting special cash dividends declared everywhere. Costco, Dillard's, Las Vegas Sands, T-Lab was the newest one this morning. This doesn't necessarily create shareholder value. You don't go into a stock looking for a special one-time cash dividend. Look at a name like Las Vegas Sands, for example. Yes, they have the cash on hand to cover that dividend, but they also have 2.5 times as much debt on the balance sheet as they do cash. That's not creating shareholder value. You want to take a look at stocks that are investing in growth areas such as services and analytics, like a name like an IBM, an Oracle, a CA, these big mega cap tech names that have a lot of cash on the balance sheet that are looking to grow. Yes, it's important to pay back investors, but look at companies that are consistently paying dividends, growing dividends, and investing in growth areas. That's where the bottom line comes from. It's not necessarily a one-time pop in the stock because there's a special cash dividend issued. Another concept that I'm looking at is the online brokers. Ameritrade happens to be my favorite name, ticker AMTD. Peers in the group are E-Trade and Schwab. On a relative basis, they're trading more cheaply. The operating and profit margins are the highest in the group, and they also sport a 2.3% dividend yield. Those are all key areas that you want to take a look at. Yes, average daily volume has been down in 2012, but in the most recent investor presentation on Wednesday, Ameritrade's CEO said that he expects average daily volume to go up 7% per month. That's where that bottom line growth is going to come into. And once we come back to a more normalized interest rate environment, you're also going to see some growth in the balance sheet just from that metric alone. So a couple things we want to take a look at here again are looking at names that are consistently growing dividends with healthy balance sheets, not just chasing for those one-time payers, and looking at names like online brokers from that retail investor comes back to the market.